Hi guys, welcome to another episode of Tiesto Bob's analysis. I'm here today. Today is May 3rd, 2023. So check it out. I posted the analysis in the Discord group, also on Forex Factory and on the Telegram chat. All the links are down below, guys, in the description. The link to the bootcamp is also in the description where you can learn how I trade. So I teach it. It's a 5-hour course, only $20 for now on promotion. So be sure to sign up with valuable information. Okay, so let's get started. Let's see. So this is the NAS100. Okay. We're on the daily time frame. So on the daily, we can kind of just see, let me just close this panel here. So we can see that, okay, we're on an uptrend, right? You can kind of clearly see that we're on an uptrend and we're looking for price to make a higher high. So price did break the structure up. Oops. To the upside. So what we're looking for is essentially how I mark up my lower highs and lower lows. So you got this, that, lower lows, right? And then you got a lower high right here. Perfect. What we're essentially looking for is price to come back down into this Fibonacci discount zone that we've identified, and then we'll take it from there. So we'll find our entry on the lower time frame, but essentially right now, what we're looking for is price to make a higher high. So the continuation of the trend, essentially. You don't want to go against the trend, guys. There's a reason why they say trend is your friend. I know it's a cliche statement, but it really goes to show you that it takes a lot of effort for a trend to reverse. So a lot of things have to come in place for a trend to reverse. A massive amount of money has to be injected into the market for a trend to reverse. So oftentimes, more often than not, the trend will continue in its path. So don't go against the train, essentially. Let's drop down to the 4-hour time frame. So on the 4-hour, you can see price was overextended on the VWAP, right up here. A couple of large candles to the downside. But check this out, guys. Let's just draw. So we're looking for price to come into the 50 to the 61.8 Fibonacci zone, right? So on the 4-hour time frame, there's actually a break of structure here, right? So essentially what we can see before this large bearish candle happened, we expected some sort of retracement up when this happened. So we expected something like this. We expected price to come back up, retrace, only for it to get back into our original daily Fibonacci zone. So if you drop down to the 1 hour, there were several good entries. However, keeping in mind that today was Wednesday, today the FOMC meeting, and the Fed's did a rate hike as well. So obviously, one can expect a lot of wick action on Wednesdays. That's why I always advise members to not trade during these events. So you look at my cursor exactly today at 2 p.m. Look at that wick. Under normal conditions, this would have been a good entry, right? But you would have been wicked out if you had entered short at this point. But like I said, this is a short-term short trade within a long-term long trade, right? So you don't have to take these trades. You can wait for price to actually get into the daily. So once we have confirmation in this area for a long trade, then that's a much more safer and conservative approach than trying to sell into the zone below. Like I said, this would be normally possible, but today, also being cognizant of the fact that today's FOMC, that's why you see this wick forming here today. Okay, so what are the next steps? So essentially, the next steps is, let's take a look at this a little bit deeper. So I want you guys to pay attention to these two candles right here. You see those two candles? look at the size of this candle, this large bearish candle, right? This is massive compared to the candle just before it, right? And look at the volume. You see the volume? The volume of the previous candle is actually higher than this huge candle down. This signifies that the market makers, so it tells us that it wasn't necessarily volume that pushed price into this area. So whenever you have anomalies like this, whenever you have large candles, small volume relative to previous candles, it just tells you that there's some sort of manipulation going on, right? And that's what you have to be careful about. For us, now that we know that, it's actually clues that price is being driven into this area so that the market makers can get a discount and fill their long orders. So a lot of people who trade on the lower time frames are probably going to start shorting this market, right? Like they did up here, only to find out that the market makers are intentionally pushing market down so they can get a discount for the rally to continue. And it may or may not happen. Look, we don't have a crystal ball, but if we see confirmation, like if we see something like this and you have a break-in structure like that, and then you could see something like this. If you see something like that, that's your confirmation right here. Or it could be a candlestick confirmation. So we talk about all of this in the course on Udemy. So guys, check it out. It's in the description, the link. So we're now waiting for price to show us what it's going to do next, and then we can go from there. Hope you found this useful. Thanks a lot, guys, for joining, and I'll see you next time.